All right, guys, let's take this opportunity and welcome everybody back to the Independent Investor Channel. We'll be doing aggressive growth portfolio review and M1 Finance, guys. We're up, just killing it, up close to 5 grand, just in less than a year. So just absolutely killing it in this portfolio. I'm going to review the holdings, the dollar amounts. You're going to want to stick around through the entirety of the video and check out how the portfolio is progressing on the aggressive growth side in M1 Finance. So this is the aggressive growth portfolio. There's 11 holdings within this M1 Finance taxable brokerage account. I do roll these out periodically. I enjoy these reviews. This account, for anybody that's new to these portfolio reviews, this account does not change. I do not buy and sell in this account per se. I do dollar cost average this with a small amount every couple weeks, but you can see here the bulk of the growth has come by nature of some capital appreciation. And I just want to premise this video. These 11 holdings are not just to be rushed out and bought because I'm putting an awareness video. I tend to strike a little bit deeper as to why I started this M1 Finance account in the first place. And I think for a lot of investors out there, both beginning and astute investors alike, I think you can appreciate how I've taken and layered this into my existing portfolio. My portfolio right now is around 450,000. This is just a small aspect of my total overall portfolio at just over 12,000, but I do want to mark the progress in this. This has been owned a little less than a year here as we go into the 1-year anniversary. This was started in December 20th of 2019, and the account has just absolutely killed it. It's done everything that I could have asked it to do. I think a lot of people would look at it and say, well, why don't you just invest this way exclusively, Ryan? And it has everything to do with using scale to control my exposure rate to some of these higher than average growth stocks. In other words, if I had all my money in Tesla and Tesla decided to turn south on me, I could live with that with the amount of relative scale I have in the name here. So for the astute investors out there, maybe who have an existing program through a 401k, maybe they've got individual Roth accounts, I think this can serve some real purpose for you in understanding how I use the partial share purchase program and the funding of the lowest allocation holding in this portfolio to my strategic advantage. And again, to earmark, M1 Finance is only conducive to the passive investor. I will repeat. M1 Finance is not to be used as a trading platform. It is absolutely not the correct account to use for that. However, moving into 2021, I know there's going to be a lot of people that are getting involved in investing in the first time, and M1 Finance can really help you enter into a passive investing strategy for yourself. Whether it be through passive ETFs, Vanguard is offered through M1 Finance, so you can buy whatever you want through any of your broad market ETFs. So it works really, really well as a beginning investing account. But for those seasoned investors out there, this could absolutely serve the purpose for a layering of your particular program. And this is why I do these. This is an update of an aggressive growth portfolio video that I had shot already, but this has just run up so much it was actually outdated. So I actually had to refilm this video to give you guys the most updated perspective on the portfolio. So the value over time, you can see here, in my opinion, has been fairly volatile. Right here around this time frame, the portfolio was cut in half. And that just goes to show that this can happen at any time. So although we're sitting at some pretty good games, these areas here reflect a fund up that I've taken in the account. I believe that was about a $2,000 bill that I put in the account here to fund it up and just give it an extra boost where I feel like it was dipped a little bit. But nonetheless, it's performed quite well, but that doesn't mean that can't turn south at any given time, okay? This strategic goal in this portfolio is capital growth. It has nothing to do with dividends. As you can see here, I've made 81 cents in a year in dividends. So dividends is not the goal. Capital appreciation is the goal. And I think we can all agree that $4,800 of profit on an account that has a mean average or a total contribution amount of just over $7,000 is quite impressive. So let's scroll down here and we'll take a look-see. Obviously, these holdings are owned, again, on a passive basis. So you can see here Tesla on the top end. My target allocation for Tesla is 12%. So obviously new fundings that roll into this account are not going to go to fund Tesla. Tesla has just really run to the moon. It's been quite nice, relatively small position for me. But nonetheless, we're overweight Tesla just because it's been on its meteoric rise. And it's great. I mean, it allows me to gain some exposure to a company that I wouldn't normally invest in, to be honest. Tesla, from a fundamental perspective, is not a company that I'm really that interested in putting a huge chunk of capital in. I think the larger the amount that you put in Tesla, I think the more toward speculation and more toward short-term trading you get. Whereas I'm looking to take a little bit more long-term passive approach, even with Tesla. So this allows me to remain disciplined on the name and not be tempted to trade in and out of the name. And I've been invested in the company ever since I started this portfolio. It's done quite well. Right below that, Amazon, another company that I wanted to own just partial shares in. Google, right below that, just fits nicely into this portfolio. I don't really have any plans at all to expand this portfolio. There are a couple names that I'm looking at right now that may fit into this. Chipotle being right at the top here, but it's been on such a run, and you really do have to pay a premium to get into some of those names. I'm happy with the 11 that I have here. So we'll continue to just go ahead and own them and monitor them. And if I do get a retracement in this, I obviously have the cash on the sideline to go ahead and just double up this account at my leisure, which is fine. But for now, monitoring it seems like the prudent way, and dollar cost averaging it with a nominal amount seems like the prudent move to me at this point. And these holdings are working. Facebook is great. Again, just fits nicely into this portfolio. CRM Salesforce has been on an absolute tear since joining the Dow Jones Industrial. ExxonMobil has been removed. CRM has just been a great holding. This would have been one that I would have actually felt comfortable putting a little bit larger amount in. It is one that I've invested in the other accounts, and I've just made a fortune with CRM. It's a great company and doing some great things going forward with customer relations management software that they offer to large businesses. And Uber's moved up on the allocation silently. Nobody's talking about it. I find that interesting. I believe Uber is trading at around 50 a share right now. Just a nice position. I bought this just right after IPO. It was one of those holdings that I figured it was going to be a high growth company. Fairly large market cap in industrial/technology, but wanted to get a small position in this, and it's grown quite nicely. The position here, 402 gains here, has doubled the position, so can't complain there. Adobe Systems here right below it as well has done great. As you can see here, we're 11 for 11 on these. They're all in the green. So very, very nice to see that at any one given time. I don't necessarily draw my thesis from short-term moves, as these can change quickly. There's no doubt about that. But for the short term, we're looking at some pretty interesting gains in this. All right, next on the list is NVIDIA. It is the only chip player that I have in the space. Right below that is PayPal. I've liquidated my position in Visa for now. based on valuation. Booking Holdings has started to gain some traction now with the vaccine talks, and travel and leisure will continue to gain favor as we go forward in Booking Holdings. And then finally, Alibaba here to round out the 11 in the aggressive growth portfolio. So just hit the 12,000 mark. Very nice to see there. Very satisfied with the progress in this. And the real takeaway here is to understand that I can invest a relatively small amount of money into 11 holdings. So I'm not stuck having to buy whole shares in any one of these given names. I can use the power of M1 Finance to add a strategic layer to my portfolio. And it's just a fun and exciting way to gain exposure to these high growth names and allow myself the opportunity to put capital to risk, but also to sleep well at night owning some of these high growth names. So with that, guys, I'll kick you back to YouTube and we'll conclude the video. All right, guys, so we've come out of the M1 Finance portfolio review for the aggressive growth portfolio. It's performing quite nicely. This is a passive portfolio. Just a reminder, the independent investor channels affiliated with M1 Finance, links can be provided and are provided in the description below. The portfolio as well will be shared with the general audience as well. So if you're interested in reviewing what's been disclosed during the video, you guys can, at your leisure, take a look at the portfolio on your own time. Guys, if it's your first time tuning into the message, want to make sure and subscribe to the channel. You want to leave your comments at the bottom of the video and share the message with anybody out there that may be looking at exploring a new brokerage opportunity. M1 Finance is a nice opportunity and provides wealth building strategies for new investors out there alike. Guys, thank you so much for tuning into the message, and good luck in your investment future.